Hey everybody, welcome to another episode of Blockchain Central. In this video, we'll see what's been going on with the crypto market lately, analyze why it's been dipping, and try to predict how long it will take. It's August 2018 and we're entering month 9 of crypto bear market. The prices have been going down systematically since the beginning of the year. Of course, if I knew exactly why it's happening, I'd be a billionaire. But in this video, I'll try to list a few potential reasons for that recent slump. First of all, let's see why all assets such as stocks and currencies fluctuate in price. It is important to note that for stocks, fundamental factors such as earning per share and price to earnings ratio strongly influence prices. But since they're not all that relevant for crypto, we won't be focusing on those. The primary factor that dictates prices is of course supply and demand. But we also need to factor in economic indicators, geopolitical events, and market sentiment. I'm sure you all know the principles of supply and demand, but let's quickly recap what it's all about. Simply put, supply is the number of items people want to sell, and demand is the number of items people are looking to buy. When there is a difference between these two groups, the prices in the market move. The greater the difference between demand and supply, the more significant the move will be. The second contributor to stock prices are economic factors such as interest rates, inflation, GDP, unemployment, and consumer price index. When it comes to currencies, their prices can also be greatly influenced by economic factors, as well as local and global political events. The third significant contributor to price fluctuations is news about the company. A good example of that was a recent tweet by Elon Musk who threatened to take Tesla off the stock exchange. As a result, Tesla stock closed at plus 11% on that day. A big part of that movement is what is called noise traders, people who make trading decisions based on news only, without diving into any fundamental analysis. So how does it relate to crypto? As a decentralized system, cryptocurrencies and blockchain should not be as affected by local political decisions as fiat currencies and stocks. Of course, a big political shift in a country that is a major buyer or seller of crypto will affect the market as a whole. In addition, news and market sentiments can have fundamental impact on a crypto market that, in its very nature, was conceived as a pure manifestation of free market principles. So, let's look into a few interpretations of what's causing the recent dip. The first hypothesis is actually my favorite, and it's based on a simple concept that this year's crypto valuations are correct and accurately depict the current value of the assets. The reason why we perceive it as bear market is that towards the end of 2017, we saw a huge overinflation of prices caused by the crypto hype train. The second possible reason is ever-evolving regulatory pressure facing cryptos in all markets. This is also partially connected to the recent hack reports. For example, the reported Conrail hack that took place in South Korea, one of the most prominent crypto markets in the world. Generally, 2018 saw multiple unfavorable regulatory moves in big crypto markets. An example of that can be the SEC investigation in the US, the February China Bitcoin ban, and the delay in creating the first Bitcoin exchange trade fund, ETF, by the SEC. The third reason can be attributed to Bitcoin as a currency. Since Bitcoin is considered to be the poster child of all cryptocurrencies, anything that happens to Bitcoin has a ripple effect on the entire industry. Two key factors which hamper the development of Bitcoin are energy efficiency and transaction speeds. Check out the video. The fact that Bitcoin trading volume has been consistently going down since the beginning of this year raises questions regarding the currency's staying power and scalability. So what does it all mean? To look on the bright side, the recent downward trend can actually be a sign of maturation, since when you consider the long-term perspective, Bitcoin price is still up over 100% when compared to the same time last year, when it was trading for less than $3,000. Second of all, the current legislative challenges show the willingness of major regulatory bodies such as governments or the SEC to treat crypto seriously and develop solid legal tools to manage blockchain-derived assets. What's your take on a recent slump? Are you buying into the dip? Let me know in the comments below. Before you go, please note that this content does neither represent financial, legal, or tax advice, nor is it supposed to be understood or interpreted as solicitation to buy or sell any securities, coins, or tokens. Thank you for watching. If you like this video, make sure to hit the like button and subscribe to Blockchain Central to never miss a beat. Happy investing.